Welcome back to the Crypto's Key Conversation. We're going to quickly jump into CoinGecko here. We're currently sitting at a $1.78 trillion market cap, currently down 4.3%. Looking at the top 10 here, Bitcoin sitting at 37,073, Ethereum sitting at 2,683, Tether's Tether, Binance Coin sitting at 370, Cardano sitting at $1.04, Solana sitting at $100, XRP 60 cents, DOT 1898, Terra sitting at 48.38. And as you see, as we come down here, there's still a lot of red with just very little green that's going on within the 24-hour period within our market. Coming over here, the Bitcoin fear and greed index is showing us that we're still in that fear range at 28. And as you can see, we've been in this range from extreme fear and fear for some time now. And that's due to a lot of different reasons. And obviously, it's just a lot of uncertainty within the markets. Stuff like this from Blockworks, where they tweet, the U.S. is now 30 trillion in debt. Stuff like that, it's just only compounding and putting more salt in the wounds when it comes to the decimation of our markets and just us being down in fear and in the red. So right here, the digital asset investors responding to a tweet that says 30 trillion. It's hard for me to believe that we found ourselves in this position, but here we are. Our debt is now 125% of our GDP, meaning we owe more money than we are generating in our economy. Absolutely staggering. Digital asset investor says Congress should pass a law that every spending bill begin with the words "with money we don't have." So it's stuff like this that's really hurting all markets, because there's just a lot of fear of kind of what Jerome Powell and the Fed are going to do when it comes to combating and tackling inflation with their interest rate hikes and their tapering. So stuff like that is absolutely affecting our markets and keeping us within this this range, having a lot of red in the market. So this article from CBS News says the Fed appears poised to hike interest rates in March in effort to tackle inflation. Coming down here, says the Federal Reserve on Wednesday signaled it's ready to tackle inflation as prices have shot up in the past year and millions of Americans face the strain of higher costs. It says, quote, with inflation well above 2% in a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. So with a strong labor market, but you have articles from ADP here on CNBC that's talking about companies unexpectedly cut 301,000 jobs in January as Omicron slams the labor market, ADP says. So the key points of the article says private payrolls fell by 301,000 from January versus the estimated for a 200,000 gain. So it fell 301, but you were expecting a 200,000 gain, but we have a strong labor market. It says this was the first reported net job loss since December 2020 and came as a surging Omicron cases hit hiring. The pandemic-sensitive leisure and hospitality industry was the hardest hit, losing 154,000 jobs. So obviously, as you can tell, there's just so much uncertainty going in the market, especially with, us being 30 trillion in debt. You have inflation continuing day by day, the uncertainty from Jerome Powell and the Fed and, what their plan is with tackling inflation with, their tapering and their interest rate hikes. Obviously, we've been told that we should expect some interest rate hikes coming through 2022. But from the last Fed meeting, there wasn't really any information that went out. So as much as it wasn't, as they say, hawkish, it really wasn't dovish either, because markets don't like uncertainty. And so with it kind of being a lingering question in the air, that's obviously, fostered, the market to react in a negative manner. That's why we've been in this extreme fear range for some time. So, with all that being said, who knows kind of what we can expect when it comes to Jerome Powell and the Fed and how they combat inflation and what our market's going to look like. Obviously, February is going to play a huge and vital role when it comes to the crypto market. And they'll have some analysis that comes from a technical analysis guy coming up here pretty soon. But we're going to come over here. It says, Btc Prices Dive with stocks as fresh sell-off sees PayPal shed nearly 25%. Bitcoin reaffirms its current correlation with equities as a tech stock, in particular suffering as trading gets underway. So quickly before I continue on this, is we've talked about how there's a lot of people in our market, the crypto market, that don't like when people talk about us being correlated to, a tech stock or being correlated to the stock market in general. But in reality, as you can see from, data analysts and people that go through TA, and if you could just look at charts based on, the regular market versus crypto market, there is a lot of correlation. If something happens, good or bad in the regular market, we can expect, some sort of, rhyme or rhythm that happens within our market. And that's just a reality. As much as we know that, cryptocurrency, Bitcoin aren't tech stocks, they're assets. the reality is right now there's some correlation that's happening that's affecting. So if the regular market's affected, then we tend to be affected in some form or fashion. So coming down here, there's two things I wanted to cover from this. So this is from TXMC. There's a popular Twitter account that says market structure for me is still clearly bearish and still clearly bearish under 39.6K. Would like to see a daily close over 40.2K before I felt a bigger rally possible. My base case is still a test of 29,000 or 30,000 or lower before any future price discovery. Macro FUD is driving all. Hodl and wait. So it says right here, the last time this happened was October 2020, the same time before that was at the bottom of the COVID crash. So obviously there's a lot of different analysts out there that have their own different perspectives based on the charts or based on, market sentiment and fundamental analysis and correlations to the regular stock market. So whoever's right or wrong, the whole point is there's been an overwhelming consensus of like this whole 30K level or 29 level and retesting to reaffirm, a future progression within Bitcoin and within the market. So obviously with us having this weird correlation to tech stocks and the regular stock market, and with inflation, Jerome Powell, and everything that's going on, the uncertainty in the market, we're going to continue to be, shaken and kind of going through these weary times of just kind of being in this down or bear trend. So coming over here, I wanted to reference Crypto Crew U. I think the gentleman's name's Steve, but I kind of follow this guy and I kind of like, some of the TA he comes out with. He preaches, it's only facts in the chart, none of his personal opinion. But he brought up a good point when it comes to February, because we reported in a video recently how we're talking about the importance of February and how February can tell a lot of, the direction where we're going within this market. So he was talking about, the different major crashes that's happened in relation to its effect with he said it was the stochastic RSI, which is the momentum indicator. And he was saying this was the crash, a 67% crash in 2014. And this was the 58% crash in 2018. And he was saying there's been 3 points in Bitcoin's history where this has shown up. And obviously we're in this range right now, but there's been 2 other indicators. So obviously we're here. So he was referencing this and showing like, hey, when we broke this back in 2014, we were in this range and it didn't recover for 579 days until we came out of it. And then he was saying in 2018, during this 58% crash, when it broke that, I think it was the 18 to 20 stochastic RSI level, he was saying it took 395 days to recover. So then he's saying where we're at right now, February is going to have an important candle that's going to print, that's going to show us, hey, are we going to stay below this level, or is this going to be a fake out to where we just, don't stay down here and we kind of break out, or are we going to, solidify a candle that's going to keep us under this 18 to 20 level, which then is going to repeat, history, repeat or have some sort of rhythm with history. And he was talking about how if that were the case and we were to break, we can be in this range till, next March 2023 and just a bunch of different things he was saying. But I wanted to bring this up because obviously we were saying there's some correlation that's going on, and we talked about how February can be highly important in regards of telling us where the market can go, kind of foreshadowing. I think this has some importance here when it talks about the stochastic RSI and the momentum and the effects of the candle we print at the end of February and where we're going to be. So make sure, if you haven't followed Crypto Crew U, he actually has some great videos out with some great technical analysis. He's one of the guys that I follow and kind of reference with when it comes to my personal investment strategy. Just kind of making my own, opinion based off of kind of some of the stuff he says and the other analysts that I follow. But I wanted to bring that to your attention. So coming over here, some positives. We're going to get into a lot more positive, but I wanted to cover this. It says PayPal stablecoin, what it can mean for payments. PayPal has confirmed it is exploring a stablecoin. Here's how experts see the potential impact of a PayPal coin. So, this is actually quite interesting. Obviously, PayPal is massive, so for them to get into, further into the crypto space, developing their own stablecoin is absolutely huge. So coming down here, looking at some of these quotes, it says PayPal coin could fuel general interest in payments overall. Consumers and small business alike are looking for a safe and reliable alternative to traditional currencies and payment networks. Right now, there aren't that many well-established, trusted organizations in the space where trust is such a critical component. PayPal would be one of the first major financial companies to embrace crypto. So, you know what, all positives, whether it's not my, my favorite asset or it's not my favorite company. The point is it's more exposure, more adoption, more awareness within the space that's going to bring in, new investors. And that's what we need for this space to continue to grow and flourish. So coming over here, NYDIG announces Bitcoin savings plans for employers to pay in Bitcoin. Under the offers, companies that opt for the plan will enable its employers to allocate a part of their earnings towards investing in crypto. So in the latest from the ever expanding world of crypto, the New York-based Bitcoin company has presented interested parties with a new savings plan to further their adoption of crypto amongst the non-crypto audience. It says the Bitcoin Savings Plan is an employee benefit program with which any employer who goes for the plan lets its employees convert a portion of their paycheck in Bitcoin, as per the announcement. A NYDIG Bitcoin Savings Plan is an easy to adopt benefit that can help their employers stand out from the pack while providing their employees with a critical tool for protecting their financial futures. So this is absolutely massive. I know for me in particular, and if I was still working at, a normal job, or if I was still in the fire service and this was an option, I would definitely, see if that's something that, I can opt into. This is absolutely massive. This is just more exposure, more adoption, and it's absolutely massive for the growth and expansion of the crypto space in general. So great job, NYDIG. So coming over here, some more positive from Blockworks. It says, breaking, Disney is hiring an NFT expert to lead its efforts in the space. So we talked a lot about, NFT explosion and NFTs hitting the mainstream and people seeing the writing on the wall when it comes to, digitizing, a bunch of different assets, NFTs, crypto gaming, and just that explosion within that sector of the crypto market. So this is absolutely massive. Disney is a massive, massive company. So that's huge. Another thing here, El Salvador relaunches improved Chivo wallet with U.S. tech and plans 1,500 new Bitcoin ATMs. That's huge. 1,500 new Bitcoin ATMs. So put that around, their country, their space, and you have more exposures. Everyday people walking past these ATMs are going to learn more and more about Bitcoin. Just like we talked about in previous videos, it's about, getting their feet wet. Let them dip their toes in and let them learn about it and let them, put a little bit of money in so then they get comfortable with it. And as they get more comfortable, they further start exploring, all of what crypto has to offer, which then brings in more people, brings in more money, expands the space. That's absolutely massive. So coming over here, Blockworks also tweeted, Zuckerberg, metaverse is our priority over Instagram, Facebook, and WhatsApp. So obviously we know, Mark Zuckerberg, converting Facebook into Meta, becoming a Meta company, heavily seeing the writing on the wall when it comes to the metaverse. So that's absolutely huge. I wanted to end on this tweet here that I thought was pretty powerful. It's from Dennis Porter. It says, a constitutional convention is inevitable in the U.S. 17 of 50 states already support it. We only need 35. It should be the mission of every Bitcoin and digital asset supporter to push their local legislator to include an amendment to make Bitcoin legal tender in the U.S. So this is huge. This is huge. Obviously, when it comes to, we in our space, we have the Ripple versus SEC case, which is massive. You have a lot of supporters within the crypto community that are supporting, Ripple and the XRP community to further push the narrative with Johnny Deaton in the class action lawsuit, just trying to make waves that way. And then obviously we've seen, a bunch of adoption with, different states, different individuals, wealthy investors, and cities adopting Bitcoin as legal tender. So this is absolutely massive, and absolutely continue to push that agenda, to push that narrative, to make not, obviously this is huge, just for Bitcoin, but that's for the entire space. Bitcoin is, in a sense, the umbrella of the entire space, or the mothership of the entire space. So, as this start happening and as Bitcoin becomes more and more seen as legal tender, it's only going to increase exposure and growth and adoption within the entire space. So that's absolutely massive. But that's kind of my sentiment on kind of what's going on in the market right now. I just wanted to share that with you. With all that being said, stay strong out there. Be safe.